With a track record of boom and bust cycles, many people are wondering if a Bitcoin crash is imminent. In 2021, the digital currency experienced a wild ride, reaching an all-time high of nearly $69,000 on November 10th. However, it has been on a decline since the beginning of 2022 and now worth $39,000. Get to know the signs of a Bitcoin crash coming 2022 in today's video. Number 5. Fast selling pressure. Surprisingly, amid the drop in Bitcoin price, there has been a lot of selling pressure on Bitcoin crypto, making it difficult for a Bitcoin price prediction. Although the cryptocurrency has subsequently recovered some of its losses, there is a substantial likelihood of further losses as selling pressure increases. Know that the crash was precipitated by the risk-off mood, which was caused by the rapid outbreak of the global pandemic, COVID-19, which swept the world's markets. With all of this speculative activity in the market, analysts believe that much of the selling pressure in the Bitcoin market is coming from the cash side, which is being exacerbated by traders' large influence on Bitcoin derivatives. This is quite something. However, we believe the fast selling pressure is as a response to volatility in the market. Learn more about the volatility in Bitcoin cryptocurrency in this video. Number 4. A dip in cryptocurrencies. The price decline of Bitcoin comes amid a broader crypto market crash that has seen the worth of cryptocurrencies plummet by roughly $300 billion in the last 4 days. Ethereum, ETH, followed Bitcoin's downfall, losing 13% of its value since last week, while other major cryptocurrencies did much worse. Solana, SOL, has gone down more than 16% in the last week, while Terra Luna has dropped more than 25%. For crypto asset investors, the question today is when the decline will halt, said Simon Peters, a crypto market analyst at the online trading platform eToro. The market is caught in the greater adversity of investment markets grappling with where to find comfortable levels in the aftermath of interest rate hikes. Number 3. The volatility in Bitcoin cryptocurrency. Volatility determines risk in cryptocurrencies are the riskiest asset that one could put his earnings into. It's a must for businesses and individual investors of Bitcoin to have an interest in volatility of the cryptocurrency, and it has been stated by analysts that Bitcoin cryptocurrency is starting to develop high volatile rates. It is important to note that a cryptocurrency fails to meet the requirements for being a currency if it has a high volatile rate. If you like what you've seen so far, don't forget to subscribe to our channel and switch on notifications to learn more about cryptocurrency. Volatility in the financial sector is defined as the statistical measure of an asset price, which makes it not entirely bad, but can cause a crash in the cryptocurrency market if not kept neutral. There is a likely crash of Bitcoin if necessary measures are not taken by the industry to minimize volatility in the industry. The 6-month bounce back after their crash last year, for example, was a good comeback. We hope to see the same in 2022. Number 2. Macroeconomic indicators. Although Bitcoin is typically marketed as a non-associated asset that allows investors to hedge against the traditional market, recent data suggests that Bitcoin is highly correlated with equities. What's more, Bitcoin's correlation to traditional finance isn't good news at a time when macro factors such as inflation, monetary tightening, equities, among others, are negative. The correlation between Bitcoin and the National Association of Securities Dealers automated quotations, NASDAQ, is really high, and that isn't changing anytime soon. Coincidentally, Bitcoin's correlation to the NASDAQ achieved all-time highs of 0.70 in April 2022, according to a study by Arcane Research. Analysts use a -1-to-1 scale to determine correlation, with -1 indicating full opposing movement and 1 indicating perfect sync. The correlations across asset classes are in an extreme state, pointing to Bitcoin's all-time high correlation to stocks and concurrently negative correlation to gold and the US dollar index DXY. Anyway, the link does not imply that Bitcoin follows stocks in general. Yet, because Bitcoin and equities have almost no temporal difference, they usually go up or down at the same moment. Aside this, another major reason for the dip happening in Bitcoin cryptocurrency is consumers losing interest because of underlying risks like economic indicators. To get more insights to why consumer confidence is upending, continue watching. Number 1. Consumer confidence is deteriorating. Many investors have fled the market due to recent crypto volatility. Strategic trust in cryptocurrencies is low, according to data from Cryptocurrency Sentiment, a poll that measures consumer interest. Despite the fact that prices have recovered in the previous 7 days, the market's lack of strategic confidence is bad news since there is no sustainable, medium-term driven investment buying. Share with us in the comments section your thought on these signs of Bitcoin crash. I hope you got a kick out of watching today's video. Kindly stick around for our next video on Ethereum up or down. Ethereum Price Prediction 2022. Thank you for watching, and we'll see you in our next video.